The U.S. House of Representatives has approved the extension of Agoa. By a vote of 340 to 54, lawmakers passed a bill renewing the African Growth and Opportunity Act through to 2028. The key trade program was first enacted in 2000 and gives eligible sub-Saharan countries duty-free access to the U.S. market for certain products. For South Africa, the program is especially significant, allowing exporters in sectors like automotive, agriculture and textiles to remain competitive in the world's largest economy. The bill now moves to the Senate for approval and then the President before it can become law. South Africa is facing fewer red flags when doing business with Europe. The country's been removed from the EU's list of high-risk jurisdictions after its exit from the Financial Action Task Force grey list in October. The move is expected to ease compliance burdens for European banks and investors dealing with South African counterparts. Treasuries welcome the development, but says more work still needs to be done to strengthen prevention and prosecutions of money laundering and terrorism financing. The South African Revenue Service is set to introduce a major reform to its tax system this year. It's launching an advanced pricing agreement aimed at tightening oversight of multinational companies. The new system will allow SARS and global firms to agree in advance on how cross-border transactions are priced for tax purposes. SARS says it has recruited specialist staff and expects to start accepting applications from June. The move is aimed at curbing profit shifting, improving tax certainty and boosting confidence in South Africa's investment environment. And South Africa's sugar industry is calling on government to scrap the health promotion levy, also known as the sugar tax. They've warned that a surge in cheap imports combined with the levy is putting local producers and rural jobs under pressure. SA cane growers, which represent both small and large-scale farmers, says heavily subsidized sugar imports are displacing locally produced sugar on retail shelves. The group estimates that more than 150,000 tons of imported sugar entered the country between January and September last year. That's more than 7 times the level seen in 2020. Growers argue the levy has failed to deliver clear health benefits while damaging investment and employment in rural areas. They've urged government to prioritize local supply, strengthen import protection and scrap the levy in the upcoming budget.